Hello everyone, I'm Big Money Chasing Big Money. Welcome to the Masterclass series of Bitget's Copy Trading Platform 2023 edition. My first tutorial series on copy trading was recorded over a year ago, and since then there have been a bunch of upgrades and changes. As Bitget is celebrating its 5-year anniversary, it is a good time to take another look at how copy trading works, starting from the basics, ending in some rather advanced analytic methods. If you're new to Bitget's copy trading platform, make sure you watch all the videos in sequence. If you have watched my previous tutorials, you can still find some new tips and tricks along the way. After watching all of the videos in this series, you will have a decent understanding of how copy trading works at Bitget, how to keep your account safe from liquidations, and how to stay profitable on the long run. So what is copy trading? Copy trading is when you invest funds to copy some professional traders' positions. Let's say you are interested in trading, but you are not confident enough to do everything on your own. You have the option to automatically copy the positions of experienced traders who have better chances of turning profits in the markets. As long as their positions are closing with gains, your positions will close in gains too. In return, the professional traders would get a commission from the profits you make. This way, the trader wins, as on top of their own profits, they also get a commission from the copier's profits too. The copier wins as they can just sit back and let the professionals do the work for them. The platform also wins as they earn profits from the transaction fees. It's a win-win-win situation. Why Bitget? Well, Bitget is not the first or the only exchange which has a copy trading platform. In fact, most exchanges which did not have copy trading before have started introducing the function in one or the other way. Bitget, however, seems to be the one which has copy trading in its focus. This is their crown jewel, the most important product they've ever had. Compared to other exchanges, they represent the top tier. In my opinion, they are hands down the best out there. The sheer number of traders available for copying, the reliability of their systems, the fair pricing, everything just seems to be pointing at Bitget. Obviously, the system is not 100% perfect. It has its flaws and inefficiencies, but I will get back to this later on and explain how to tackle each of them. Before jumping into any type of investment, it is essential to understand the underlying risks and the potential rewards. Like everything related to crypto, copy trading belongs to the high-risk category where investors can lose their funds. Liquidation is the worst nightmare of anyone in crypto, and one of the purposes of this tutorial is to cover all the methods that will help investors protect their investment and stay profitable on the long run. The crypto market still operates under vaguely regulated conditions. It is very much like the Wild West. For retail investors like you and me, this means extremely high risk. In copy trading, the risk can come from the market, with unpredictable price action that causes mass liquidations, and can also come from traders being copied, as there is no guarantee that they are going to maintain a profitable trading practice. Copiers have no to little control over these two factors. With high risk comes high reward. It is impossible to come up with an accurate estimation about the possible gains that are achievable with copy trading. A lot of it depends on the risk tolerance of the investor. This tutorial focuses on keeping a low risk profile, and with this, the profits are also lower than most people in crypto would anticipate. However, it is still much higher than anything in the traditional financial systems. On average, it is possible to achieve a monthly return somewhere between 5% to 10%. On an annual basis, that can potentially double your investment. With compounding, this can be quite a lot over the span of a few years. The minimum investment amount necessary for starting copy trading mostly depends on the goals of the investor. However, experience shows that it is necessary to have at least $500 to keep a low-risk profile. Obviously, the bigger the budget, the more wiggle room you have in case of market turbulence, which is not uncommon in the world of crypto. So whatever amount you decide to invest, just make sure that you always have some additional funds that you can allocate in case of emergencies. On this YouTube channel, you will find a series where I started a new copy trading profile with $500 in futures and $500 as a safety bet. I had to use the emergency funds only once, and even then it turned out to be unnecessary. However, I was really happy to have that extra stash, as it allowed me to sleep well at nights when markets were going completely crazy. After all, the purpose of this entire scenario is to earn profits passively without having to look at prices and charts all day long and get emotionally wrecked by stressful situations. So in my experience, starting with less than this would cause more issues than gains. Of course, it is possible to add funds month over month and increase the investment gradually. That is a popular approach which has its own benefits, but it is entirely up to the investor to decide what the optimal funding method for them is personally. Obviously, with bigger funds, the returns are also bigger and risks are lower. It is easier to avoid liquidations with a $5,000 budget than with a $500 one, and the profits are much more impressive too. While technically speaking, it is possible to start with less than 500, it could cause complications during operations. The reason for that is the decimal limitations of the exchange. If you have ever tried to open a smaller leverage trade, you might have noticed that the lot size is not always matching what you have entered. For example, you wanted to open a $10 position, and after executing the trade, you realize it is only like $8. This is the result of the BTC decimal limit on the exchange. After deleting full number, there is a limit of 3 decimal points, so with smaller positions, whenever there is a mismatch in the lot sizes, it is simply because of the decimal rounding. So if you are on a low leverage, it can happen that rounding will cause a different lot size to be opened. Usually, the exchange tends to round down. So my take is that a split of 500-500 is the optimal minimum to start. Technically speaking, of course, it is possible to start with less, but that would entail much higher risk of liquidation, inaccurate lot sizes, and limited profits. So, in my experience, starting with less than this would cause more issues than gains. Now, it goes without saying that just like with any other risky investment, it is a huge mistake to invest more than you can afford to lose. But how can you estimate the right amount? How much is it exactly that you can afford to lose? Well, this is obviously up to you, but generally speaking, a good method to establish that is to think of an amount that you would like to invest. Now, imagine you lost it all overnight. What would be the effects of that on your life? If losing the investment would cause any difficult time in your life financially or emotionally, the amount is probably too high. Try to come up with a figure that you can accept to lose without having any serious consequences on your life. Even though it must be obvious, but I have to stress, never ever take loans to get into risky investments. That's like the worst thing anyone could ever do. Don't forget, this is a risky investment. You don't need to have advanced skills in anything to get into copy trading. Some basic understanding of the crypto market and futures trading is of course an advantage and would make it easier to understand some moves of the traders, but it is not the most important thing you need to have. The most important thing to have for a successful copy trading profile is an analytic mindset and patience. You need analytics to understand the potential risks and rewards and select master traders accordingly. You need patience because this is not a get-rich-quick scheme. Quite the contrary, it is an investment that will bring benefits only on the long run. It is quite possible that some months will pass without turning any significant profit, and in some other months, profits can go through the roof. A cool head is needed for this game, and it is absolutely crucial to understand that constant returns are not guaranteed at all. It is not like an interest on a bank deposit or a government bond, where you are guaranteed a certain amount of monthly returns. It is entirely dynamic. There are bad months, good months, and some phenomenal months too. The point is that as long as you are staying afloat and your account is not liquidated, you will probably come out with gains. Now let's sum things up. Copy trading is when you copy positions of professional traders in a fully automated trading environment. As long as the traders are profitable, the copiers will be profitable too. The exchange will make money from transaction fees, the traders get a commission from the profits, and the copiers are happy because they are making gains. In this ideal scenario, everyone wins. Bitget has one of the best copy trading platforms for crypto trading. They are basically industry leaders. There are risks, no question about it. As with all risky investments, there is a chance of losing all of your initial funds. However, keeping in mind that everything that this tutorial will teach you, the risks of liquidation can be turned down to a minimum. To establish an optimal amount for starting copy trading, one has to consider a number which would not hurt too much if lost, but the minimum investment would be nothing less than $500 with some reserves set aside for emergencies. Prior skills are not required, even though some basic trading experience could be considered an advantage. However, the entire point of copy trading is to take off the burden of manual trading off the shoulders of the copiers. As long as there is an analytic approach with a risk-aware mindset, Following the guidelines described in this tutorial, your copy trading journey will probably be safe and profitable. In this chapter, we are going to jump in and check out the platform itself, and I'm going to walk you through the first steps of selecting a trader to copy. For the purpose of this tutorial, I have created a sub-account in Bitget and allocated the optimal minimum funds to it. I transferred 1000 USDT split by 2, 500 to futures and 500 to spot. As explained in the previous chapter, keeping some emergency funds in my spot bucket will allow me to bail out some positions which are in danger in case of some unexpected market volatility. Once I have my fund allocation, I am ready to get started. It is important to understand that Bitget has a shared futures bucket with the manual trades, so there is no isolation. If you also trade futures manually, it will use the same funds as the positions which were copied from master traders. So if you don't want your manual trades to be tangled up with the copies, you might want to open up a sub-account and allocate your funds there for exclusively reserving it for copy trading. This way there will be zero interference with your manual trades. As my futures account is now funded with the optimal minimum, I can go on with selecting master traders to copy by going to Copy, Overview. There are several options to choose from. We have futures, spot, and bot copy trading. Futures is where most of the money is made, but also it is the one with the highest risk, of course. On spot, you cannot really get liquidated, but of course the value of your account can shrink to quite low levels. The bot copy trading is basically for preset grid bots, which is a rather interesting approach and works well only if the timing is nailed properly. There is also Insights, which is more like a social media feed, so not really relevant for this tutorial. The idea is similar, however, in all three copy trading categories. You need to select professional traders to copy, and if you configure your settings right, it will turn profits for you. Futures is where most of the fun happens. There is an insane number of traders to select from. The key will be to identify the ones which are most suitable for your budget, your risk tolerance, and your plans altogether. Even though it seems like finding a needle in a haystack, it is possible to do it. You just need to understand what the numbers represent and then perform some analytics. At the welcome screen, you can already see the top-ranking traders based on different criteria like highest ROI, highest yield, highest copy trader profit, most followers, and then new elite traders. It is extremely important to understand that while Bitget makes it really easy to just click and follow a trader, it is also a pretty good way of getting your funds liquidated. So even though at first sight the numbers appear to be eye-popping and enticing, jumping right in and starting to copy is one of the worst things anybody could do. Instead, it is best to understand what the numbers mean and make an informed decision after considering all possible metrics that are available. So let's see one by one what these profile cards are telling us. First, we have a name, which was set by the trader, then the ID, which was either generated by Bitget or set by the trader. This is important as traders can change their names, but not their registered ID. So it's always better to go by this one. It is easier to look up a profile like this. Using an ID as reference is also preferred because unfortunately there are some copycat accounts that change their nicknames to resemble a successful trader. This is just an attempt to lure more copiers to their follower group. I had the misfortune of copying a copycat trader once before and it caused major losses to my account, so ever since I have been paying extra attention to make sure that I only copy the original traders and avoid the knockoffs. Right next to it there is usually a medal which shows the rank of the trader. The ranks are bronze, silver, gold, platinum, extraordinary, and legend. Now let's see what these mean and how they can tell us something about the trader. The criteria for the different ranks that traders can be assigned to is the following. I have to admit, this sheet is a bit ambiguous, like it's not clear what rank the trader will be if they meet some levels for one category but fail the others. For example, if they accomplish 2 goals to be in legend, but the rest remains in silver tier, like what happens then? But generally speaking, it does give a fair picture of what type of trader we're looking at. It's not quite easy to reach platinum level or above. Anyone in the top 3 would probably be a high roller. Of course, it doesn't necessarily mean that the highest ranking traders will be the best for you to copy, but we'll see that later on. The next thing is the maximum follower number, which depends on the rank of the trader. The higher the rank, the bigger the follower number. As you can expect, the high-ranking trader will easily get filled up with copiers. There is a solution, however. If you decide to copy a trader that has already maxed out the follower count, there is an additional 10% of room for followers who hold more than 500 BGB in their spot account. So if there is a trader that has a follower cap of 750, he gets an extra 75 slots for additional copiers if those copiers hold the right amount of BGB. It's a nice little incentive for users to invest into Bitget's native token. The next thing popping right up is the 30-day ROI, which would normally mean return of investment. Anyone would think that this trader has increased his budget by more than 8,000%. That's insane. In fact, that is not what happened. And this number is quite misleading if you don't know how it is being calculated. For that, we have this little formula. However, I'm pretty sure that the ROI calculation is still based on position size versus total gains. To give you an example of how it works, let's say a trader opens up a single position of $100 in value and closes it with 10% of gains, which is $10. He will book an ROI increase of 10%. That's simple. However, if he opens up 10 positions, each with $10 in value, and closes all of them at the same time with 10% of gains, he will still have $10 in overall profit, but it will be calculated to represent 100% in ROI. This also explains why a lot of traders, especially newly registered ones, will open up so many positions at the same time, probably with microscopic lot sizes, just to achieve these stellar results. To show you an example also from the traders, this trader right here, if we check the position history, we can see that he opened all these positions basically seconds apart from each other. This is probably why his ROI numbers are through the roof. Now, this is not to say that all traders exploit this calculation method. In fact, most of them are quite honest. All I'm saying is that ROI can be deceiving. The next one is total P&L. This is quite simply the total money that was made by the closed trades. AUM means assets under management, which represents the total budget of the followers. If high-profile followers copy this trader, this number can get quite astronomical. Total followers P&L shows how much money the followers made by copying this trader. Now, this metric is a bit tricky, as all it takes is one high-level copier to have the wrong settings and get liquidated by the copied trades, and this number will return really ugly. The opposite can be true as well. Maybe the majority of the copiers are making losses because of this trader, but a few with a big budget and proper settings are turning a lot of profits and boosting the numbers up. So my take here is that it's great to have this number, but it's not very reliable for trader selection. I consider this just as an added extra feature. Then we have the drawdown. Now, this is again very interesting. Let's assume this trader has $10,000 of a budget and he opens $100 worth of positions at 50x leverage. Even if those positions go south by 500%, it would still be only 5% of a drawdown. However, if someone with a $500 budget would do exactly the same, the drawdown would be 100%, in other words, full liquidation. So yet again, not a very reliable metric, as we don't know for sure the budget versus the lot size of the trader. And it is possible to set up the trades in a way that would show reassuring numbers here and attract as many followers as he possibly can. Here we have some assets that are being traded. This is good to know. Usually I prefer a trader who uses only one or two pairs to trade on. Then there is the average daily transaction frequency. This is again something that can get quite misleading, as it is an average value, and it can happen that the trader doesn't open any positions for weeks and then suddenly opens up a bunch within a few minutes, which is obviously not the greatest trading strategy of all times. However, when I see a really high number here, I usually ignore the profile altogether. Then we have the profit sharing ratio. Usually this would be around 10%, sometimes less, and in some rare cases more. Yet again, this is nice to have. It gives you some ideas when looking for traders to analyze, but this is still not enough to make a final decision. I consider these trader profile cards as teasers. To see the entire selection of traders, I will just go to all traders and I can sort the traders here based on the criteria here. I can hide the ones which have their follower capacity full or select to show only the verified ones. A useful feature here is to select the tile view. This will give me some additional information like a 3-week win rate, but it will hide the traded assets. I think this one is more helpful. Unfortunately, the budget of the trader doesn't appear anymore. This is new. I would really appreciate if Bitget forced the traders to reveal their budgets, but I guess that's just not going to happen. In the past, some traders did reveal their assets in their wallet, so it was easier to set up a proportional copy profile. There is a lot of information on one page, and with this number of traders being active on the exchange, it can be rather difficult to comb through all of them just to find some which are good for you. Fortunately, we have a filter button now. With this, I can actually fine-tune the list of available traders by the criteria I want to set. This is something I like to play around with. Good thing is that I can now also set the filter by ranking. So let's just adjust some of these. This list is much shorter now. It's only a few pages. This is workable. However, the numbers presented on these trader cards are hardly telling us enough about the trader to make an informed decision. So it is absolutely necessary to check out the profile more in detail. So we need to take a closer look at the trader profile to see if it is worth analyzing the trader history any further. Now let's see a trader profile more in detail. This is Kendrick. His ID is set by Bitget. He has some tags here. I can click copy, put him on a watch list, or compare his profile with other traders. In the second row, a very important number is days joined. This shows the day passed since the trader was registered. Usually, this would tell me how much trading history is available for me to analyze in detail. Obviously, the more days I see, the better. My own personal rule is that I need at least 3 months of trading data in order to get an overall idea of how a trader operates, but I prefer to analyze at least 6 months or more. The only misleading factor here is that this number shows the day of the trader registration and not the days passed since the first position was opened. So it can happen that I am looking at profiles which have been dormant in their first months, and even though they have their trader profile up and running for months, they only have some recent trades. However, this doesn't happen too often. Usually the days here are more or less accurate and they cover the actual range of history. An interesting time to check trader behavior is when there is a turn of market sentiment and to see how quickly or accurately a trader can adopt to the new direction. For example, in this January, not a lot of traders realized that there was a bullish sentiment unfolding, and a lot of them held on to their short positions below 20k BTC, which caused a lot of losses for copiers. Those ones, however, who understood that there is a shift in market sentiment, proved themselves to be professional traders with less bias than the rest. If there is enough trading history that involves a shift in sentiment, it can serve as a strong confirmation of how professional a trader really is. I mean, it is really easy to be a profitable trader if the general market direction matches your bias. Bullish traders will always do well in a bull market, and bears will always do well in a downtrend. Understanding the time of change is what separates the pros from the rest of them. At the performance level, there are the numbers that we already know, the assets that are possible for the trader to trade on, which is not always equal to what he actually trades, as we see below. It is just a list of assets that he can trade if he wants to. The analysis chart is what can decide very quickly if the trader is worth looking at further or not. The default view starts with a 7-day period, and recently Bitget added a 6-month window to select. This must mean that our prayers have been heard. I always switch to half a year now, both for ROI and P&L. The ROI shows the balance of the account of the trader. The P&L shows the closed trades. It is quite possible that even though some trades are being closed in profits and the P&L chart shows an increase, some open positions are getting deeper and deeper in red and they are dragging down the ROI. Charts with big spikes up and down suggest that the trader style is hectic and rather risky. In the best case scenario, both sides are showing me an overall uptrend. A steady incline on both sides suggests to me that there is a constant, disciplined, profitable trading going on, so that's what I'm usually looking for. If the 6 month charts are looking alright, I need to check the orders tab. History shows the closed positions, which are worth scrolling through just to see if there is an outstanding loss or some red in the records. Copy trades show the trades which are still open. Now this data is being refreshed every hour, so it is not showing you open trades in real time. In the past there was a page limit here, so you could only see up to 30 open positions. Fortunately, Bitget removed this cap, so we can see all of the open trades of a trader that was opened over an hour ago. If there are positions being open for too long or they are too deep in losses, it is a no-go. Now, obviously, these are all circumstantial, so it all depends on the given market condition if a lot of open trades are bad or not. For example, in a bull market, I don't mind long positions being stuck in red, or in a bear market, I don't mind if shorts did not turn green yet. However, it is safe to say that if you see a lot of open trades which are running for more than a week and there are a couple 100% in loss, they are not really acceptable. The followers tab will show you how much money followers made by copying this trader. These are gross amounts, which means the net profit is less, but it still gives you the general idea. Insights is where you can check if the trader has written some posts to the Insight tab. Usually this would be empty. And finally, we have the badge section. And here you can see some achievements that the trader has accomplished. Let's see the rest. We have actual asset allocation and position duration, all good to see on a monthly basis. And finally, trading volume. In other words, in what collective size did the trader open positions at a given day? Now, about this, I know some people would say that consistency is also very important at the volume level. Some would say if you see similarly sized bars over there, that's a good sign, but I cannot agree with this. I don't mind the spikes or the empty days. Why? Sometimes the market will provide excellent opportunities to get in. In that case, opening more trades will make sense. And sometimes the market is just boring without any proper move in the prices. These days, it is a mistake to open trades just for the sake of, let's say, activity. So if you see that the volume is similar on, let's say, the weekends to the more busy days, for me, that is not necessarily a good sign. Obviously, if there is no volume at all for several days or weeks, then it means that the trader has possibly gone offline or got inactive for whatever reason, and that's not ideal either. The best approach is to check whenever there are spikes to see if the increased volume is backed by market moves, and also to see under what circumstances the trader decided to step away from opening positions. These all add to the big picture of what type of trader we are looking at. Now, this is quite a lot of information to digest about a single trader. It is giving enough clues for me to decide if I want to perform the final historical analysis or not. If I have at least 90 days of history, if the monthly ROI and P&L charts are looking alright, and there are not a lot of open trades in losses, I can consider spending time preparing a full analysis. This will allow me to determine the proper copy trading settings if I decide to copy the given trader. A quick recap here. Bitget displays a lot of information about master traders. Understanding these trader profiles is key in deciding about choosing the right trader to our roster. Unfortunately though, it is just the first step in the long process of trader analytics, but the most important one. Stellar numbers and percentages can be misleading, remember that. However, once you get the hang of it and you see behind the different icons and metrics, you will be able to pinpoint some promising traders that will be worth your time to spend with a detailed analysis, or you can simply put them on your watch list for later reference. Remember, the more data you have for analysis, the more confident you will be regarding your expectations for the given trader. In this chapter, we are going to take trader analytics to another level, performing a full-blown analysis, which shall be the final step before copying a trader. Once I have selected a promising trader for a detailed analysis, it's time to dig deep and crunch the numbers. This part here might appear a bit tough as it requires a lot of manual copy pasting and some magic in Excel. However, I have simplified this method as much as possible so you can follow the steps even if you're not very experienced. You can also do the same in Google Sheets if that is your preferred application for such tasks. And there is also a much more advanced method for doing all this with complex functions and formulas, which would give you a much more elegant and more accurate solution to the analytics. But really the aim here is to make it as accessible as possible for everyone. So I'm going to keep it rather simplistic and basic. By the end of this chapter, you will see that elementary level skills are more than enough here, and the insights provided are in fact the deciding factor in staying profitable and avoiding liquidations. Now, let's see why Excel analysis is crucial here. Even though I can see 6 months of consolidated trader performance now on Bitget, it is only telling me if the trader is profitable in the long run or not. It doesn't tell me how to configure the settings to match my budget and my risk tolerance. So I will need more details to be able to fine-tune my settings. Furthermore, this will allow me to identify possible risks that are not obvious from the trader profile, and I can also reveal some potential hidden risks. All right, so I'm going to search for Kendrick. Here we go. This is the one. So I have the profile right here with all the historical trades available at the orders tab. So I will just fire up Excel with a blank workbook. And what I'm going to do is I'm just going to select everything and paste it to my sheet, but keeping only the values and nothing else. The pictures and the formatting are not necessary at all. I will just need the raw data. This is a repetitive and monotonous work to do, but it can be done in less than 10 minutes. But I will just speed things up a little bit. Now, one transaction takes up 3 different rows in Excel, so 1,000 transactions will be 3,000 rows altogether once I'm finished. So I can also track my progress by counting the rows in Excel. Now I'm around 50%. So it's going to be done quickly. All right, I'm at 2,500. And here we go, reaching 3,000. And yes, these are 3 different rows now for one transaction. And I will need to consolidate all these so that one transaction would be one row and not separated into 3 different ones. So normally this could be done by using some macro or some VBA, but I'm going to apply a nice little trick by shifting the content of the entire column down by 2 cells and then copying them over to the next one cell above and the next one above that. Okay, so now I have a cascading setup right here. I'm just going to add another column to the left and add sequential numbers, let's say like this. Select all, double clicking to the bottom right. We'll pull the numbers down to the very bottom. I'm going to add another column. And pay attention now. So this is the most important one. I'm going to enter this formula mod A1 and the divisor is going to be 3. So this is going to divide the values by the number 3. I'm going to automatically fill up everything. So now if you take a look, the leading zeros all represent a line where I have all the data necessary. Okay, so the next thing for me to do will be to apply some filtering. So for that, I'm just going to add another row and provide a heading here. So just enter some random headers. Okay, select filter. And I'm going to filter out everything except for the zeros. So it's just ones and twos remaining. And I'm going to select all of these rows, go down to the very bottom. And then I'm going to select right click and delete row. Make sure it's not just clear contents, but delete rows. Okay, now selecting back the zeros, I can already see that I have all the transactions line by line. So this is very good. Now, column B contains 4 different elements that I will need to divide somehow. Now, I'm just going to add 3 extra columns right here. Select column B, go to Data, and Text to Columns. This is the tool that will help me slice this column up. With fixed width, I will just select the slicer here and here and here and click Finish. Okay, now this looks much better. Okay, I'm just going to give a nice header name here. So column F is going to be really interesting. First, what I'm going to do is I'm going to have to rename USDT and replace it by USDT, except there will be a semicolon before and after it. Replace all of them. And now I'm going to go to Text to Columns and select a delimited option now. Hit Next. And Excel has identified beautifully the slicers. So basically, this is helping me a lot. Now, the next thing I'm going to have to pay attention to is the format. So what I'm going to have to do is select this column and apply a text format to it. Okay, do the same thing with this one. All right, looks good. And then hit Finish. So this way, I already have another separation done pretty well. In column H, I still have to divide it by 2. Let's say I'm going to go to a fixed width now. And here at the end of the timestamp, I'm going to put my slicer and hit Finish. Okay, looking good. Now with column K, yet again, it's a fixed width. I can slice at the timestamp, hit Finish. Yet again, I'm going to rename column L, and I'm just going to replace the percentage mark yet again by adding a semicolon to it. And go with the delimited, click Finish, and here we go. So now my datasheet is actually looking pretty good. The only thing I need to do is to replace the dots with commas, just so it would match my regional formatting for the decimals. Okay, so this is looking pretty good. Let me just add some headers right here. Okay, done. Looking quite nice. Just some additional formatting here and here, just to make sure that the prices are reflecting reality. Okay, like this. Good. All right. So now I'm going to copy the username and the ID, just to make sure I have both. And I can also copy the profile image. In fact, this is quite neat. Just to give the sheet a name. With all this neat data available, the easiest thing to do is to calculate the duration of the positions simply by extracting the closing date timestamp from the opening date timestamp. And here we go. let me just round it up a little bit. And I already have a fair idea of how long each position is being open with this trader. Before I go on, it's best to set some basic conditions like the leverage, the lot size, transaction fee costs, profit share, and eventually the net profit. Okay, so leverage, let's say I will give it 25, lot size will be the minimum 10. Transaction costs, now this is interesting. The default pricing for opening or closing a position is 0.06%. And if you have a discounted account, the price is much less. But I will get back to this at a later chapter. The formula to calculate the exact cost is to multiply the fee by 2 and also multiply that by the leverage. Okay, let me give some decimals here. Good. So profit share is usually 10% for most of the traders, not all of them, but most of them. To calculate the net profit, first I'll need to see the gross profit, which is very easy to figure out. All I need to do is multiply the lot size with the base profit, like this. One critical element though is to lock down the lot size cell by simply putting a $sign before the column and the row. And once I'm done with that, I can simply double click at the bottom right corner and it automatically calculates everything for me. Okay, so this is the gross profit, which is the profit before any fees or transactions are being deducted, also calculating by the base leverage. So the leverage adjusted profit is the same, except it doesn't calculate with the trader's leverage, but it will calculate with my own settings. To do that, first I will need to remove all extra characters from the leverage column, like this. And once I have nothing but numbers, I can finally give it a decent proportional calculation. And I'm going to divide the gross profit by the trader's leverage and multiply it with my own leverage. So I'm also going to need to lock it down like this, hit enter, and then double click on the bottom right corner. And here we go. This is the profit if I apply it with my own leverage that I set here in this sheet. Okay, looking good. So next thing is the transaction costs, which is then again very simple to calculate. All I need to do is take the lot size and multiply it with the transaction cost. Yet again, I need to lock it down, actually both of them. So both the lot size and the transaction costs. And then once I'm done with that, double click, done. Okay, so just to check, yeah, it refreshes very well. Let's see if I change the lot size. Yeah, this is working too. Okay, very good. Finally, I'm going to have to calculate the profit share. Okay, so that's what the traders are taking. That's their cut. Yet again, something quite simple. I will take the leverage adjusted profit, take 10%, lock it down, and apply the same automatic calculation like this. Okay, this is also quite simple. And finally, let me just put another column here. Finally, I'm going to calculate the net profit, which is basically what I keep in my pocket in the end, which is the leverage adjusted profit minus transaction costs minus profit share. And here we go. So this, if I summarize it, is not that bad actually. Let me just put an easy sum command here. Okay, good. Give it a nice format. All right, so yeah, this is looking pretty good. I have a fair idea of how much money I would make by copying this trader. Now, there's one thing which is very important to understand is that users never pay profit share after losing trades. So actually, I need to figure out if there are losing trades. Of course, there are. So in this case, there is no credit for the users, unfortunately. So I will need to make sure that whenever there is a position closed in loss, there would not be any profit share calculated. To do that, I will just simply enter a conditional command. The way to do it is I'm going to go and type in if the value of the cell is bigger than 0, then calculate the formula as it is. But if it's not 0, then the profit share shall remain 0. Okay. Double click on the corner and here we go. Now let's just take a look if it indeed did what it was supposed to do. So let's see again the negative ones. And you see there is no profit share calculated here. So it's actually working quite well. Unfortunately, transaction costs are, there are payable whether the position was closed in red or green, doesn't matter. The position was opened and closed, therefore it's payable. Okay, so finally, everything seems to be working well. I can make different types of estimations. It works pretty well. Okay, good. I'm quite satisfied with this. The next thing I can do is just to give it a little bit of conditional formatting. To do that, I can go to conditional formatting and I'm going to color code these so that whenever there is like a position being open for way too long, it will give a nice red color. And the opposite method shall be applied to the profit. So when there is a high profit, it should be the greenest. When there is a loss, it should be red. And finally, I will just create some pivot tables. Very easy to do. I'm going to go to Insert, Pivot Table, and I'm going to select everything from column S to column A. Click OK, and I'm just going to select the opening date, that's the opening timestamp, and the net profit. So this way, I will see how much I would make each month and in total if I copied Kendrick. Just by taking a simple look at this, it's clear that the profits are not bad, especially if we consider that, let's say we are at a 500 budget scenario. And that means actually more than 20% in a monthly gain. That's actually quite insane. So let me reduce it to 5x. And here we go. With 5x, profits are much more reasonable on a monthly basis. So it's roughly like 10, 11, 12%. That's pretty good. The other thing I'm curious about most of the time is the number of trades opened per day. So yet again, I'm going to pull the opening timestamp, and to the values, I'm going to pull the count of orders. Now, a monthly count does not help me too much, but if I expand it, I can see that some days are pretty busy. I mean, there are some days where the order count is at 18. That's quite insane. So yeah, Kendrick definitely gets carried away every now and then. It's not usual, but still, it does happen. Okay, so yeah, with this, I have a basic understanding of how Kendrick operates. With a $500 budget, I feel comfortable with a 5x leverage and $10 lot size. And I figured all this out in less than 30 minutes. Now that I have my analytics sheet set up, I will need to make some checks to see if there is anything odd or a potential red flag that will tell me not to copy. If a trader opens up too many positions in a very short period of time, for me, that is not a good sign. If there are some spikes in this chart, which measures the open trades per day, I always go back to the events of that day just to get an understanding of what happened, and then I cross-check those trades with the duration. If they were closed within a couple of hours, then it's okay, but if there were mass trades which were kept open for weeks or more, it means it's a higher risk. With that, I have also touched on the other important metric, which is the duration of the positions. If we are talking about a high-frequency trader, positions should be closed within a couple of hours, really. Sometimes it is okay to keep them for a day or so, but with high leverage and high frequency, positions which are staying open and possibly in red for several days or weeks are a big red flag and need further attention. The third and final red flag trigger for me is when I see a lot of different assets being traded. Even though it is not a general rule, more of an observation, the more asset a trader uses, the riskier his profile is. Professional traders would usually get familiar with just a couple of assets. I mean, each of them would have their own behavior, investor community. BTC, for example, is a mature asset. The moves have more in common with stocks. Lower market cap altcoins can move double-digit percentages per day, so they require a totally different trading approach. So when I see all these assets being traded seemingly without too much consistency, for me that is an obvious sign that the trader is taking on too much risk. There are some traders who are experts, let's say, in trading XRP. Others might have mastered trading Tron. Usually, BTC and ETH are the two assets which represent the least of the risk. And as a general rule, I try to avoid traders with more than 2 or 3 assets in their historical records. Now, with the analysis sheet in my hands, of course, I can customize the alerts for different risk factors the way I like it without having to rely on Bitget's method for calculations, and this is where the power of a self-made analytics sheet is. Once I prepare such a workbook, I can get a pretty good sense of what type of trader I'm dealing with. Okay, quick recap here. Unfortunately, at the moment, there is no easy method for extracting the full historical records of a trader, and our only chance of getting an objective view on the trader's trading profile is to manually copy-paste the history into an Excel spreadsheet and perform deep analytics to understand what we are getting into. Once the analytics file is ready, we can figure out if there are any red flags like positions being open for too long or maybe too many positions being opened within a short period of time. We can also see what the profitability would be with different leverages and lot sizes. In other words, we can get a clear picture of what we are dealing with. Alright, I'm making progress. It seems like I have a pretty good Excel sheet which shows me all the data that I can possibly extract from Bitget. I know the red flags to look out for, but this is still not the full picture, as there are some additional underlying risks. I am a bit frustrated by the fact that the historical records are limited to 1,000 line items. If I analyze a trader who opens like 5 positions daily on average, that would give me roughly 6 months of a history to analyze. However, if I run into a high-frequency trader who is not messing around and he opens, let's say, 20 positions on average per day, that would mean that I would only get a glimpse of how they trade, as it would only have less than 2 months of results, and that is hardly useful. In these cases, what I do is I just wait until I might have, let's say, 3 months of data, and then if this high-frequency trader shows convincing results, then I might start copying him with some very cautious settings. The other problem I have is that at this moment, I cannot calculate the effective drawdown I would have if I started copying a trader. In the best case scenario, I would be able to calculate how much of a drawdown I would be looking at by copying a certain trader, let's say in a 6-month historical window. I would be able to tell if a certain setting would get me liquidated or just, cause a massive deep loss. So I could fine-tune my leverage and lot size to a combination where my account only gets into a drawdown that I can accept. The third problem is that past performance is never a guarantee of future results. I had situations in the past where I started copying a trader who had solid results over a year, but still eventually he started making irresponsible trades. He got visibly nervous about positions, closing them too soon in profit and too late in losses. Eventually, his account blew up. That was one of my biggest surprises, and I saw other well-performing traders getting burned out over time. So unfortunately, the search for the best traders is something of a never-ending story. I do it every now and then just to see if there is a talent out there that has the necessary trading history for me to analyze. This means that even if I find decent traders, my setups are correct, and everything looks perfect, I still need to monitor the performance regularly just to make sure that there is no change in trader behavior, reliability, and overall performance. This is a constant struggle, but I think of it as growing a plant. It would usually grow by itself as long as it gets the necessary attention that it requires. The last thing is the market itself. The crypto market is still very much unregulated, which brings exposure to market manipulation. This is unavoidable, it's just the nature of crypto at this point. Even the most skilled traders can be caught off guard by some manipulated market moves. The latest revelations in the SBF trial about artificially suppressing the price of Bitcoin are prime examples of that. So just a quick summary. On top of the risks that can be identified in the historical analysis, there are other underlying factors as well. There is a limit on records to extract and analyze, the drawdown is impossible to accurately estimate, and trader performance can change over time. Also, market conditions can turn results upside down simply because, well, we are dealing with crypto. Now that I have my analytics, I understand the risks, it is time to jump into copying. Before doing so, however, there are two things I need to do. The first is that I need to establish how many traders I will introduce to my roster. As I have a limited budget to start with, I will go with 2 traders in the beginning. There is this golden formula that I have figured out over time, which looks like this. With $500 in the budget and 1 single trader in my roster, the maximum leverage I can set is 10x with the minimum lot size, which is $10. As long as the selected trader keeps his position count to a reasonable level, this is working. A good rule of thumb is to keep the average monthly returns to around 10% and not more. If I want to work with 2 traders, I will need to decrease the leverage for both of them from 10x to 5x. Anything below 5x leverage, however, will possibly cause some difficulties with the lot sizes, so I wouldn't really go below that. If my copy trading is going well, and let's say that I increase my budget to $1,000, I can decide to either introduce a 3rd trader to the roster or keep the 2 traders I have been copying and increase their leverage to 7x each. Keep in mind that all these numbers are conditional. These will only work if the trader is a responsible one. This is why it's absolutely crucial to make a full analysis of the historical trades to identify if they are reckless with their positions or they can keep calm in turbulent times. This formula will also not work for all traders. However, this will be just fine if the selected traders are not going crazy with their trades. If I see any trader who tends to open up more than 10 or 15 positions a day, the formula becomes invalid. So please use this formula very carefully. It only works for the selected traders who had been analyzed properly and their trading behavior indicates that they don't take too much risk. The second thing I will need to do is to set the leverage of the manual future trades to 50x, and I need to do this for every asset pair that I will copy from my traders. This is necessary to make sure that no matter what leverage I assign to my copy traders, there will always be enough liquidity in my account to open multiple positions. The lot sizes will always be whatever I set in the copy configuration. This is basically just to make sure that I will not run out of margin in case there are a lot of positions being opened. But let's get back to actually copying a master trader. Once I have done all the magic in Excel that I need to do, and I have found a decent trader who matches my risk tolerance and expectations, I will click on Copy and switch to Advanced. And here I can see all the countless assets that this trader could potentially use, but I know that he only trades BTC and ETH, so I'm going to deselect all assets and click only on BTC and ETH pairs and hit Confirm. This way, only these 2 will appear in the configuration window. Margin mode can stay as it is. I mean, the only selectable option is USDT, so that's fine. The leverage setting must be set to specific, and this one here is very important. Following my formula that I have established before, as I have $500 in the budget, the maximum leverage I can set for 1 responsible trader to be copied is not more than 10x. However, as I will select 2 traders to be copied, I will set 5x for both long and short positions, and copy mode will be $10 for each lot. For the risk management part, to be completely honest, after all these years, I am still undecided if this is a good thing or not. If my copy goal is to set up a fully automatic passive income source, then it is probably a good idea to enter a stop loss percentage. If I had the time to follow the markets and see how my positions are doing, it might be a better choice to manually close the positions which look like spinning out of control. I had cases where I was eventually better off with a stop loss setup, and just recently I had a case where I could have saved a substantial amount just by being patient and trusting the master trader without a stop loss. Essentially, this one is completely up to the copier to decide. At the moment, I'm leaning more towards the choice of leaving this one empty. Now, all I have left is to confirm my settings and I'm done. Time to do the same with my second selected trader, and here we go. I have 2 master traders in my roster ready to roll. Now, here's for the chapter summary. With the analytics done properly, I can go and select a trader for copying, considering everything that was revealed while crunching the numbers. While the golden formula is solid, it only works if the copy trader keeps his trades under control. The formula shall always be adjusted to reflect the given trading style. Generally speaking, the settings shall be set up in a way that the estimated ROI would not exceed 10%. Stop losses can be set if the analytics support the idea. The roster is the team of traders that I put together. Now let's take a look at the copy trading menu and how to assemble a dream team. In my copy trading page, I see the copy trading assets. This is the total turnover that was traded. Next to it, I have copy trading net profit. This is what actually stays in my pocket. In other words, the gains after deducting all the fees and commissions. The unrealized P&L is the balance of the open positions at the moment. Don't be alarmed, this is usually red. And finally, the days joined. This is simply the days passed since I created this profile. In the Elite Traders section, I can see how much money the traders made for me. I can see the net profit per trader is the same calculation method as the one above. The only thing which is not here is the funding fee, which is completely independent of the trader. Now, why do I have more than one trader? And why does it matter what traders I put into my team? Experience shows that the best profitability and lowest risk can be achieved when a copier can select multiple traders with different trading methods. This will allow them to offset each other's risk factors. Personally, I have 5 to 6 traders in my roster, 4 of them solid, reliable ones, and the other 2 are in a very cautious configuration, kind of a probation period, just for me to understand how they trade in real life. Obviously, for this team, I have a bigger budget allocation as well. It is important to understand that quite often traders tend to open similar positions, and in that case, risk exposure is being multiplied. So whenever I decide to add another trader into my team, I try to make sure that the trading methods and trading styles are indeed different. I use the analytics covered earlier to figure out how they operate. If I see that the majority of my traders are high frequency and predominantly bullish, I usually balance it out with a trader that is also high frequency but leans more to the bearish side. This is helpful in risk management as well, as the different directions can mitigate liquidation risk. Furthermore, copying a single trader basically means a single point of failure. Now, even the best traders can have a misstep or a bad streak. The markets themselves tend to shake out retailers every now and then. If there are other traders which are profitable, their profits can decrease the damage done by the one which is failing. Playing the matchmaker, of course, is not an easy task, but if it's done well, it can really work better than copying just a single trader. No matter how well my team is put together, how my copy trading configuration is set up, I always keep monitoring my roster on a regular basis. I do it at least once a month. Trader performance is not constant or guaranteed, and it can easily happen that a trader who had been performing quite well starts producing losses and the trading style can change. In these cases, the best thing to do is just to reduce the leverage, in other words, decrease the risk exposure, and watch what happens. My personal rule is that whenever a trader closes a month in losses, I check the lost amount and compare it to the previous month's profits. If the losses can be traded back within, let's say, 2 months average gains, I keep the trader with a reduced risk setting. However, if the second month is also closed in losses, I simply unfollow the trader to avoid further damages. Keeping these things in mind, I have traders who come and go, and I have some long-term profitable ones who did not disappoint. A quick summary here. Having multiple traders helps in mitigating risks. Matchmaking is important. If the trader profiles are complementing each other, it helps with risk management and profitability too. The roster needs regular attention. Trader performance must be monitored to make sure that team members who are losing their edge are replaced by another one with better prospects. In this chapter, I'm going to elaborate on the different fees that are payable in copy trading and cover some investment strategies with realistic expectations. Anyone seriously considering getting into copy trading with conviction and with a long-term plan needs to be fully aware of what fees are payable during this entire process. I mentioned some of them briefly in the previous chapters, but the full breakdown of payables looks like this. First, there is the profit share. This is a simple commission to the trader after profitable trades. This is kept at 10% of the gross profit. This might change over time, but for now, this is the most common percentage for master traders. Of course, no commission is due after losing positions. Even if the trader uses a DCA strategy and exits in an overall profit, this 10% will only be deducted from the profitable positions. Furthermore, Bitget does a really good job of protecting copier interests by providing a refund from the trader commission in case some of the positions were closed in losses. The amount of the refund would probably not cover all of the damages. At least you get back some money of what you already paid to the trader after the profitable trades. The next one is the transaction fees. Now, this one goes to Bitget. The base rate is 0.06% for opening or closing a position, which means 0.12% for one trade. Of course, you have to multiply this by the leverage that you use. Calculating with 25x, it means that for one position to be opened and closed, you will be charged 3% of the lot size. So if you open up a $10 position with 25x leverage, you will be closing it in profits as long as you are above 3% ROI. Now, this can be a lot on the long run, so I would definitely recommend applying for a discount. You can do that by registering an account with the link in the description field below. This will grant you a rate of 0.051%. Keeping the example above, that would decrease your minimum profitability percentage to 2.55%. As copy trading and futures trading in general can get quite intensive regarding position count, this is something that can save hundreds of dollars worth of fees. You can check your current fee structure over here if you go to futures information and take a look at taker fee. If you already have an account up and running and you also passed KYC, you might think that you are bound forever to that Bitget account, but you are actually able to open up another one simply by using a different email address and passing KYC with a different type of identification document. In my own example, my first default rate account was KYC'd with my ID card, and the second discounted account was passed with my passport. This way, there was no conflict with the serial numbers. So do yourself a favor and grab yourself a discount with the link. You will thank me later. The funding fee is one of the most interesting ones. This is not payable to a trader or an exchange, but this is basically a fee which is payable between position holders. So this is a purely peer-to-peer payment. The bulls are paying the bears and vice versa. If the funding rate is positive, it means that the long position holders are paying a fee to the shorters every 8 hours. If the funding fee is negative, then the shorts are paying for the longs. This fee seems to be quite low, but during turbulent market conditions, it can change dynamically. However, I can only recommend to check out the transaction history. You can actually export all the data into an Excel file from Bitget. All you need to do is go to Futures account, roll down the transaction history tab, go to Futures records, and go to Export. Now, you can see the time frame, and then you would choose the fees from the list and click on Generate. You will be surprised to see how much you are actually paying for the funding. In my sub account that I use for my videos, that has been running for almost 10 months. According to my calculations, roughly 7% of my total budget has been spent on this. That's almost 10% on a yearly basis. So it's not insignificant, quite the contrary. This can bite quite heavily. Unfortunately, there is nothing to do about this. It works pretty much the same at any other exchange where you hold leveraged positions. The good thing for Bitget is that they only charge funding every 8 hours. So if your copied positions are closed quickly, you might not be charged for them at all. The other good news is that if you are playing a contrarian game and you short when most users are long and you keep those positions for long enough, you can actually make some pretty good profit by getting paid by the other side. The flip side is true as well. If the majority of the market is short and you are keeping long positions, you can make money by getting paid from the shorters. Now, when it comes to investing, it is essential to have clear expectations, goals, and an exit plan. In an ideal scenario, if all settings are correct and traders are doing well, a 5 to 10% profit per month is a reasonable and easily achievable result. Aiming for higher would set the risk of liquidation to a level that I personally would not be comfortable with. Aiming for lower is safer, but not necessarily worth the underlying risk of being in crypto. For me, the best so far has been setting up my configuration with expecting this range to be achieved. With these settings, I avoided liquidations even when there was total carnage in the markets and still managed to get out with profits after the dust and debris settled. Should I have allocated a higher leverage or a higher lot size or chosen traders which are riskier, I probably would have had to rely on the emergency fund, but this way it was smooth sailing most of the time. So even if I calculate with such modest figures, it means that I can double my investment in a year, and if I also apply compounding, it means that I can achieve multiples of that as time goes by. It is also a feasible plan to set aside monthly profits coming from copy trading month over month. Bitget has a decent savings plan for USDT which will guarantee some returns for fixed-term investments. And finally, make sure you have an exit plan. If you reach your goal, set the profits aside, take it off the risk table. Preserving funds is the most important aspect of investing. Compounding profits over and over will carry the risk of losing the gains that were achieved with patience and discipline. So have a plan for what you intend to do with the gains once your goal has been achieved. Quick summary for this chapter. Make sure you understand what fees are payable. Don't be blindsided by the gains that are being displayed on the master trader profiles. Some fees are quite obvious, others are hidden, but you can check every little movement from the transaction records. Don't get greedy. Having realistic profit goals combined with patience will provide you the best risk per return ratio. And don't forget to set profits aside regularly. Bitget has plenty of options for safekeeping your USDT. Make sure you take advantage of those. Alright guys, this was the Big Money Copy Trading Masterclass for Bitget. I hope you enjoyed the tutorial and you found it useful for your copy trading journey. The purpose of this video was to educate, to show some techniques and tips that could potentially help you in staying profitable and avoid liquidations. I have been doing copy trading for some years now, and I'm happy to share the experience that I gathered. After all this time, I've been making profits while staying safe from blowing up my account. The best part of all this was that I made gains in this ugly bear market of 2022 and 2023. Of course, copy trading is not the only thing I do, but definitely this is one of the things I enjoy the most. Please beware of scammers. Remember that every content I make is free and always will be. I will never have paid groups, and most importantly, I will never ask for money. I'm glad if you learned something useful. I hope all this will save you from getting liquidated in the crypto casino. If you have any questions, please feel free to comment below. You will also find all useful links in the description field. If you want to help out in building the community, use my link for registering an account if you haven't already. This will put me in a better position to negotiate even bigger discounts with Bitget for the new and existing members. Feel free to browse around my other tutorial videos on the channel. I usually upload similar content like this one, so take a look. You might find something useful there too. Trade safe, big money out.